To newer dividend investors, Coca Cola stock as we trade is one of those companies just to buy and hold forever, and that will 10x your returns. Just because Warren Buffett holds it doesn't mean that you should too, and today we're going to be going in depth on Coca Cola's financials, their dividend, and at the end, finding a fair price for Coke stock. And before we get into the video, it would mean so much if you could hit that subscribe button for me. On this channel, I promote real man's investing, actually looking at businesses' fundamentals, not selling a stock because the price goes down. And I love researching businesses and sharing with you guys here, so if that sounds like something that intrigues you, it would mean so much if you could hit that subscribe button for me. And if you want to go the extra mile and really help support what we're doing here on the channel, get access to some awesome perks which include quarterly reports, exclusive episodes, and so many awesome more stuff, make sure to become a channel member today, link in the description. And with all that out of the way, roll the intro.
Hello, I like money.
Alright, to start off, I want to talk about Coca-Cola's brands, what they actually do, and what their whole business is overall, unless you've been living under a rock. Coca-Cola basically is a beverage brand. They sell so many beverages. Coca-Cola owns iconic brands that are drank by billions of people every day. This includes the iconic Coca-Cola brand itself, Dasani Water, Smart Water, which I'm a fan of. Another brand that I'm a fan of that I think they have big potential with too is Fairlife, Georgia, Minute Maid, they own part of Monster Energy, Fuzz Iced Tea, Thumbs Up, Body Armor, and those are just a few of the iconic brands they own, and they're always making new acquisitions and doing in-house brands, such as the recent brand AHA that they've actually just launched 2 years ago, which is a sparkling water company. Coca-Cola's clear path to growth in the future is going to be acquisitions in these in-house brands, so it's important that they continue doing with this the cash they have. Coca-Cola's main competitor mainly is Pepsi. Pepsi is a food and beverage brand, which they own a lot of iconic brands as well. Moving on to Coca-Cola stock, currently Coke is trading at $53.14 a share, and they're currently trading at a 52-week low. Coca-Cola is a company that typically does not see a whole lot of volatility, but this week it dropped almost 5% in one day, which is a rare sight to see. So this has investors wondering, is Coke at the right price? Currently, Coca-Cola is trading a forward P ratio of 22.05, which is very high for a company like Coke, which only has limited growth. Now, Coca-Cola is obviously going to be trading at more of a market premium due to the brand value that they have and their proven ability to stay through tough economic times. They currently have a dividend yield of 3.46% and have earnings per share of $2.41 per share. Their CEO is James Robert Quincy. He has a pretty solid accent too. Coca-Cola currently has a $229 billion market cap, so let's take a deep dive into Coca-Cola's financials to see what all the hype is about. For me, the most important metric to look at when looking at a company and whether I should invest or not is the free cash flow, no doubt. For me, free cash flow is the real indicator of whether a company is truly making money or not. Yeah, a company can have a lot of revenue, but it doesn't mean anything if they don't have any free cash flow or if they're just blowing out all that money when it comes to the revenue side of things. With our companies, we want to see consistent, large, and good free cash flow growth. Now with Coca-Cola, we need to keep in mind they're like 150 years old and they're a very mature company. We got to compare apples to apples here, guys. That's something I see a lot of other YouTubers doing. So you're not going to be seeing 15, 16% free cash flow growth year over year. That would just be impossible for a company like Coke to do. It's more reasonable to see 5 to 10%. I think that's a reasonable amount. And we can see Coca-Cola's free cash flow per share is currently $2.20. And we can see pretty much since 2010, yes, they've been producing a large amount of free cash flow, and it's been relatively consistent, besides the dip that they've had throughout the 2017 years. It's been consistent, but at the same time, it has not been amazing growth. They have a 3-year growth rate of 3.82%, a 5-year growth rate of 11.62%, which I think is a little higher than what should be expected because of that decline they had, and a 10-year growth rate of 2.35%. So what can we expect for free cash flow growth in the future? I would expect 3 to 4%. I think that's reasonable to average out over time with the acquisitions that they've been doing especially. But it's not reasonable to expect to see companies like Coca-Cola see 10-15% free cash flow growth. We need to compare apples to apples here, guys. And this also brings into my next point, which is your situation and why it matters. For somebody like me, I'm much on the younger side. I have a lot of years ahead of me. I'm looking for a little higher growth than this. But for somebody that's in their 40s, 50s, and they want a little more stability and a lot more safety, Coca-Cola is definitely more of the way to go. We also like to see the profit margins and how profitable these companies are. And Coke is a pretty profitable company. They have a gross margin sitting at 62% right now, a net margin of 28.3%, and an operating margin of 20.06%. And you could see historically how consistent they've been with these profit margins. So I mean, as I mentioned, when you're an older investor, your goals are different. You're looking for more stability, not crazy growth, but you just want that consistency and stability, which I think Coke really does offer, and I think that's why it's trading at a premium. Also, with our companies, we want to make sure, especially for you dividend-focused investors that are a little older on the side of things, that these companies aren't flooded in debt, and they won't have enough cash to pay off that debt if we were to go into some crazy high interest rate environment or anything crazy to happen. And we can see cash and short-term investments for Coca Cola, it does have a little more than their current cash equivalent. So definitely this is not alarming for me whatsoever. I think Coke is in a pretty solid position if they were to have to pay off that debt. And they have been making some offensive acquisitions that will help growth in the future, so I definitely don't think that this is unacceptable at all. Alright, let's talk about the dividend. We'll get into the dividend growth, how sustainable it is, and more about that. They have a 1-year growth rate on the dividend of 4.55%, a 3-year growth rate of 3.91%, a 5-year growth rate of 3.36%, and a 10-year growth rate of 5.09%. Now, this is not the greatest dividend growth whatsoever, but you got to keep in mind, if Coke were to hike their dividend like 10 or 15% every year, it would be unresponsible and unsustainable for the future. Also, their payout ratio, which we'll get into real quick here, it is pretty high on the relatively higher side. Also, my favorite quote that I've said myself, dividends are the result of a company's free cash flow. Their free cash flow growth has been very similar to these dividend growth rates as well. So I mean, there's a trade-off here. The dividend growth and growth overall is not great with Coca-Cola, but in exchange, you get an amazing brand, a moat over the beverage industry, and all the other things that Coke and the security with it. Ideally, with a company's free cash flow, you want to see it going in multiple directions, capital expenditures, dividends, buybacks, and you want it to be really diverse. And we're going to look at the payout ratio. And currently, Coca-Cola's free cash flow payout ratio is 79.88%, meaning they're paying out nearly 80% of their free cash flow in the form of dividends. Now, me personally, I'm not a huge fan of that. I ideally like to see a payout ratio below 60%, and there has been a recent hike in the last few years when it comes to the free cash flow payout ratio and the earnings per share payout ratio, which is 80%. So this just kind of solidifies my point here. Coca-Cola is a company that's paying a lot of their money back in the form of dividends. Obviously, they can't really intelligently reinvest it back into their business, but I would like to see them also potentially buying back shares on any significant dip on their stock price. Now, I think it is a good thing that they aren't buying back shares during this time as they are overvalued, which we'll get into. Shares outstanding declining over time is a good indicator for a company as well, meaning that you have more equity in the company with every stock you own. And we can see over time their shares outstanding have gone down, but not at the greatest rate that you'd ideally want to see. Now, I don't think that this is a horrible thing because they do trade at a really big market premium, which I mentioned we'll get into at the end of the video, but they have actually been not diluting their shareholder over the last 4 years with slight increases in share count. Now, this isn't going to kill you as an investor, but it's not the positive thing you want to see. So, is Coca-Cola's dividend safe in my opinion? I would say there are some question marks regarding the future of the dividend. Most likely, they're going to continue growing that dividend at a really slow rate and continue paying it as they continue generating that large amount of free cash flow quarter after quarter. But it's not the best thing you want to see, and when you're investing in stocks, I think for my situation especially, I'm looking for the best of the best, and I want high growth total return over the long term. And lastly, we'll do our valuation metrics to find an acceptable buy price for Coca-Cola stock, because I think valuation is the real indicator of whether you should make an investment or not. If you buy a stock and it's overpriced, that's one way to lose money. Buying a bad business is another way to lose money in stocks, but you never want to overpay for your companies. To start off, my favorite valuation metric is discounted cash flow. So plugging in our DCF model, our current share price, which is $53.14, our free cash flow per share, which is $2.20, our projected free cash flow growth rate, which I put as 4%, which is pretty much in line with what they've done. I simulated over to 50 years because we're long-term investors here, and obviously we want to invest in companies for market-beating return as I could just buy the S&P 500 and get a market return. We get an acceptable buy price of $33.50, which is nearly 60% below the current price of the stock. This is not a great indicator, but we do need to keep in mind here that Coke is a company that always trades at a premium. It's one of those companies like Costco that always trades at a premium due to their brand value, reputation, and their stability that they're going to offer. So we need to keep that in mind. So this is an indicator that Coca-Cola is potentially overvalued right now. And lastly, we'll do the dividend discount model for you dividend-focused investors out there. Plug in the current share price, $53.14, the annual dividend per share, which is $1.84, the annual dividend growth rate, which I kind of put as the same free cash flow growth rate because dividends are the result of free cash flow growth, 4%, 50-year simulation, and a 10.5% discount rate, and we get a present value of $28.02, which is nearly 90% under current share price. This is crazy, and I think these two valuation metrics just show how much of a premium is really traded on Coca Cola stock. With that said, though, how likely is it going to follow these prices? Probably not. Investors, especially the older investors, are going to lean towards Coke during the tougher economic times, but these are definitely potential indicators that Coca Cola stock is overvalued right now. With that said, though, what is an acceptable buy price in my opinion? I think a company, no matter the growth rates at any price, is attractive potentially. With Coca-Cola, if it were to potentially go down into the 40s, I would consider relooking. I'm a little down in my position right now in Coke. This is mainly because when I bought, I really didn't understand valuation the greatest. Also, I just planned on it being a buy and hold forever investment. With that said, though, I've had some recent thoughts of potentially trimming my Coke at the right price. This video is sponsored by DividendData.com. If you want access to the valuation metrics that I just used on the video, use DividendData.com for 2 weeks free without charge. You can use that. You can also use what I use to get the metrics, financials, future valuation projectors, and so much more, portfolio tracking included. Check out DividendData.com. It's the ultimate time saver at the end of the day. Instead of using online free resources, which probably would have took me an hour or two to get all this information, it took me 15 minutes. Check out DividendData.com for 2 weeks free, links in the description. Alright, what are my final thoughts on Coke? Coke is a good company. It's a staple, and it's not going anywhere. People are going to continue consuming their products through the good times and the bad. Unfortunately, there's a price you pay for that, and there's a crazy premium on the stock with not great growth rates to back it up. So with that said, I'm not that particularly eager to buy Coke. With that said, though, also, I do own Coke in my portfolio right now, and I do have a pretty high cost per share relative to where it's at right now. If I were to get to the right valuation, I would definitely consider adding, but there's no eager in me to really add to my Coke at the moment. It's all situation, guys. My situation is going to be different from yours. If you're older, your acceptable buy price might be a little higher than me. I want to thank you for making it to the end of the video. Let me know your thoughts in the comment section on Coca-Cola stock. Do you own any? What do you plan on doing with it? Were you looking to buy it? I'd love to hear. Also, if you want to talk more about Coke and all sorts of other stocks, join Discord, link in the description. Thank you all. Become a channel member today if you want to do the extra mile. Smash that like button, subscribe, and of course, do dividend stocks, not drugs. Have a good one.